Namaskar and thank you for tuning into the Economic Brief, our weekly program on things related to the economy, both in India and the world. And this week we look at the year gone by and examine the pitch for 2026. And coming up in the program, in 2025, India moves from trade turbulence to record growth, a structural rise towards a $5 trillion future. Global trade hit by tariffs, trade wars and rare earth flashpoints sees diversification in 2025. (2026) to see the global economy reinventing amid turbulence, with India at the core of this transformation. Now, 2025 was a year that tested India's economic resilience and revealed its ambition. From tariff shocks and global trade turbulence to record-breaking growth and digital transformation, the nation's journey unfolded month by month. This is the story of how India turned challenges into triumphs, proving that its rise is not just cyclical but structural. A year of transformation, laying the foundation for a $5 trillion future. Let's look at this report.
"2025 saw India's economy prove its resilience and ambition. From tariff shocks in January to record-breaking growth in December, the story unfolded month by month, showing a nation on the rise. The year began with global trade wars reigniting. Tariffs disrupted supply chains and exporters faced turbulence. India seized the moment, positioning itself as an alternative hub, diversifying markets and accelerating export promotion missions. By March, reforms under Atmanirbhar Bharat provided fresh incentives for manufacturing and electronics. These measures cushioned the blow of external shocks, strengthening domestic demand and reducing reliance on volatile global flows. April brought sharper challenges. US tariffs on Indian goods doubled, slashing exports by nearly 30%. India responded swiftly, supporting textiles and gems while expanding trade with ASEAN and Africa. By June, the payoff was clear. India announced it had overtaken Japan to become the world's fourth largest economy, the GDP crossing 331 lakh crore rupees. A symbolic moment marking India's arrival among the world's economic giants. India's digital revolution reached new heights, with UPI processing more than 18 billion transactions in July alone, cementing India's position as the global leader in fast cashless payments. In August, the International Monetary Fund confirmed India's GDP at $4.18 trillion, ranking fourth worldwide and contributing nearly 4% of global output. India's GDP grew at 8.2% for the second quarter of fiscal year 2025-26. This was due to timely GST reforms combined with continued capex infusion. Manufacturing and services led the surge, proving India's growth was structural.
So I think the GDP growth story is largely India-driven. I think we also gave stimulus in terms of GST rate cuts. Before that, I think the income tax rates had been brought down, and together with that, I think we have support for the rural economy. So, and monsoons have been reasonably good. So all these factors did support India's growth. I think so. India is largely a domestically driven economy.
By October, inflation fell to just 0.25% year-on-year, the lowest in the current CPI series. At the same time, exports rose nearly 5%, showing resilience even in the turbulent global trade environment. The index of industrial production rose nearly 4% in November, with manufacturing up nearly 5% and construction surging more than 7%.
So if I aggregate October and November, both months, there is a growth in merchandise exports, despite all the global turmoil. All the levers of the economy have demonstrated a great deal of positivity.
By December, India's nominal GDP stood at 343 lakh crore rupees. Real growth averaged 6.6% for the year. Exports reached a record $825 billion. Services exports $387 billion. And cumulative foreign direct investment crossed the $1 trillion mark. The message was clear. India's economy was not just growing, it was transforming. India's booming economy is now firmly on the path to $5 trillion and within the next decade poised to stand among the world's top 3. Bureau Report, DD India.
And to put the Indian economy into perspective, we have with us well-known economist Prasenjit Basu, economist and author. Thank you very much, Mr. Basu, for being with us. So is domestic consumption, anywhere near peak levels in India?
No, it's not near peak levels, but it's growing very strongly and should continue to grow strongly through the next 12 months. Because we've had significant cuts to the GST rates across the board. We've had personal income tax rates cut in this year's budget, so they came into effect in April. All of that is contributing. Plus, we now have a very strong Kharif harvest, something like an 8% increase in food grain output this year relative to last. That too will contribute because it will significantly boost rural incomes. Farm incomes will be stronger, and that will provide the basis for even stronger consumption spending in the period ahead. So India is on a very good wicket. But the other aspect is that interest rates are coming down because inflation is extremely low, the lowest since this series for the CPI began 14 years ago. Yes. So inflation is extremely low. That allows the RBI to cut rates significantly further, and that is going to provide a significant boost to investment spending as well. So all the engines are firing. The one potential problem area was exports, but even exports have held up remarkably well. Goods exports for October, November together were up 2.2% year on year. For November alone, they were up 19.6%. So we've had very strong export performance, despite the tough trade barriers put up by the US.
So what does this say about India's economic management from the highest level down?
Well, it's remarkably good. Inflation is down sharply to record lows. Growth is very strong. As you pointed out, 8.2% real GDP growth in the latest quarter, which is a return to norm, because over the last 4.5 years, real GDP growth in India has averaged 8.2%, in fact. And I think it can actually pick up further in the rest of this fiscal year and into the early part of the next fiscal year. We should have close to 9% GDP growth because of the stimulus to consumption and the potential stimulus to investment from lower interest rates. So in terms of services exports, the performance remains very, very strong. There are some fears about artificial intelligence eating into some of the low-level coding work that Indian software companies do. But the reality is that Indian software and services have moved on and, in fact, are doing more and more high-end work. They're beginning to win high-end contracts. If you look at the company data from the likes of TCS and Infosys, etc., you're seeing very good momentum, new orders coming through. So I don't see any evidence of weakness for the Indian economy. Now, the interesting thing is that this year we'll probably get a small current account surplus. The rupee has been extremely weak this year. Well, I mean, it's weak in the sense that it's down about 6% in the calendar year. That isn't particularly weak in a historical context, because if you look at 2011 and 2013, there were 6-month periods during which the rupee depreciated 15% on each of those two occasions. So compared to that, this is a modest depreciation. But if India is able to get a trade deal concluded with the US, the reforms that have occurred this year will place India in very good stead to grow even more strongly and to see a current account surplus that strengthens more and actually causes the rupee to appreciate.
Okay.
In which case, we could well get to $5 billion, to a $5 billion GDP economy by the end of FY 27.
$5 trillion economy.
$5 trillion economy,
Right.
yeah.
So stay with us, Mr. Basu, as we've talked about India, but in an isolated case, let's put it in the context of the global economy. So 2025 pushed global trade to the edge, as we know. Historic tariffs upended supply chains, hitting industries from automakers to toys. The US-China trade war, driven by leverage as well as key exports, sparked global retaliation and market shocks. So what happened is that rare earths and critical minerals became flashpoints, while courts stepped in to untangle disputes. Diptanshu Kashyap has the report.
2025 marked the return of full-scale economic confrontation. Hours after taking office, US President Donald Trump reignited a global trade war, rolling out sweeping reciprocal tariffs starting at 10% and quickly escalating for key partners. Tariffs soon hit historic highs, up to 145% on Chinese goods and 50% on Indian exports, sending shockwaves through global markets. Supply chains were disrupted, costs spiked, and retaliation followed as China's exports to the US fell for 8 straight months, while Indian industries scrambled for alternatives. Framed as leverage for new trade deals, the tariff blitz would test how much strain the global economy could handle.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
The US-China trade war swung between escalation, negotiation, and uneasy truces. New US tariffs in February were followed by levies tied to fentanyl precursor exports, prompting Beijing to retaliate against American agriculture, energy, and autos. By April, tariffs on both sides had passed 100%, export controls tightened on sensitive technologies, and sanctions deepened the standoff. Behind the headlines, back-channel talks continued, with fentanyl emerging as a key pressure point. Temporary truces through May and summer repeatedly broke down over whether either side would make real concessions to unlock relief.
I think that is one of the most important bottom line issues that the U.S. urgently wants to resolve. And it really won't take much from the Chinese side to help to honor their end of the bargain. And for the American side, it's easily, making sure they just remove the 20% tariff that was added because of its frustration toward China's inability to control the export of those chemicals.
Beyond fentanyl, the fallout was swift and global. Trading partners struck back, from China's levies on US farm goods to Canada's electricity surcharges and Europe's countermeasures. Rare earths became a critical pressure point, disrupting supply chains for EVs, electronics, and defense systems. Companies passed on higher costs, automakers faced overlapping steel and aluminium duties, and even toy makers warned of price hikes. Courts intervened with lawsuits and rulings that repeatedly paused and reinstated tariffs. By May, consumers faced an average effective tariff rate of 28%, the highest in over a century, embedding volatility across manufacturing, agriculture, energy, technology, and global markets.
The 2025 trade war was more than just about tariffs. It was about leverage, supply chains, and who sets the rules of global commerce. What began with sweeping duties became a year of retaliation, uncertainty, and rising costs, exposing vulnerabilities from store shelves to rare earths. As temporary truces replace lasting solutions, the world enters 2026 with a more fragmented trading system where the economic power is increasingly weaponized and the global stability remains fragile. In New Delhi with camera person Monty Singh, this is Diptanshu Kashyap for the Economic Brief, DD India.
Well, we have Mr. Basu with us still. So, Mr. Basu, are tariffs yesterday's war? Because, the countries have factored it in, that the tactics have been understood. What do you think? And maybe to the detriment of the United States also?
Yes, to some degree, to the detriment of the United States. But I think there's some evidence that the US industrial sector is in fact responding positively. Inflation has not risen as much as many economists were predicting. The key reason for that is oil prices have stayed low. And in fact, they're currently around $60 a barrel for Brent crude. So they haven't really risen much over the past 12 months. And they initially fell from about $80 a barrel on the day of the election in November 2024. Between that day and now, they've come down quite a bit, from 80 to around 60. And that has helped keep US inflation relatively low. Right. Not too low. It's around 3%, which is not really low relative to what the Fed wants. It wants it to be at 2%. But it's not high relative to what existed during the Biden years. In fact, it's lower than the average inflation of the Biden years, which basically means that inflation hasn't really taken off. But with regard to tariffs, we haven't had a repeat of the 1930s. The fear was that the US would impose very high tariffs, the rest of the world would retaliate, and we would have a beggar thy neighbor kind of situation similar to the 1930s. Nothing of the sort has happened. In fact, the US has retreated relative to China. It has come to compromises with most other countries. Mm-hmm. Unfortunately, India is not among them yet.
Not yet.
Partly because India is playing hardball. India is not giving way on agriculture and dairy. And so the negotiations continue.
Indeed.
But most other countries have given in. The UK has a bilateral trade deficit with the US, but it is still facing a 10% tariff. Same with Singapore. They haven't done anything to retaliate because they know that access to the US market is very important, and they are taking it on the chin. 10% tariff, okay, we'll still go and trade with the US. So there's been no retaliation. Supply chains have been disrupted, but not excessively.
But what do you make of India's trade diversification? 4 FTAs signed this year in 2025. What do you make of it? Yeah,
that's very good. I mean, FTAs with the UK, a significant trading partner, the European Free Trade Area, which is for small countries. Switzerland is an important source of capital flows. Liechtenstein, another one, even smaller, but similar. Norway, an important oil supplier. So that's the EFTA countries. Oman is a very interesting one because Oman and India have historic ties that go back 300 or 400 years. Oman has Hindu temples from 200, 300 years ago. And it welcomes Indians and does not welcome Pakistanis. It's a very interesting country. Now, the previous Sultan of Oman went to Mayo College, Ajmer, and he had a soft spot for India as a result. The current guy does not have that link, but he is continuing his uncle's relationship with India and has just deepened it with the Oman FTA. Now, the FTAs provide preferential access to Indian professionals into places like the UK. Now, this is very interesting because when the British were ruling us, they didn't recognize most of our degrees. They didn't recognize our professional qualifications. But now they are going to move towards recognizing a lot of Indian qualifications. And that'll enable freer flow of professionals. That will effectively deepen the relationship, the commercial relationship between the UK and India. And of course, India, the likes of Tata, Lakshmi Mittal, the Mittal, ArcelorMittal Group, are major investors in the UK economy. So is, the IndusInd Group. So you have a lot of Indian entrepreneurs that have a significant presence. In fact, the Tatas are said to be the largest employers in the UK. And so that means that the relationship between India and the UK is changing towards one in which India is playing on the front foot, and Britain is going along.
And similar also perhaps with New Zealand.
New Zealand too, Now, interestingly, the New Zealand one is just being negotiated, been negotiated now, and it seems to exclude dairy.
That's right.
Now, if you look at New Zealand, it's primary exports are dairy products. But New Zealand has made the pragmatic decision that it would prefer to have access to the rest of the Indian market,
Indeed,
even if dairy doesn't open up to it, because quite frankly, I'd say that Frontiera is not that competitive against Amul and Mother Dairy.
Good.
But that is to be tested. India has kept it aside. So, and New Zealand has agreed. So now the interesting aspect of that is that RCEP, all the members of RCEP except China now have FTAs with India. So India is effectively a member of RCEP without some of the disadvantages of the non-tariff barriers that China has.
So it looks like India is on a strong wicket. And let's look then at what 2026 looks like. As 2026 dawns, the world economy enters a decisive chapter. The turbulence of the past year, tariff resets, fractured supply chains, climate-driven pressures as well. All this has given way to a landscape, defined by resilience and reinvention. And nations are rethinking how they produce, how they trade, how they innovate. India is at the heart of this transformation. More in this report.
As the world steps into 2026, the global economy stands at a pivotal moment. Growth is stabilizing, but trade tensions, geopolitical realignments, and climate-driven disruptions continue to reshape how nations produce, consume, and connect. Supply chains are more resilient than they were a few years ago, yet still vulnerable to shocks in critical minerals, energy markets, and technology-linked trade. In this shifting landscape, agility, digital intelligence, and sustainability have become the new pillars of global competitiveness. In the middle of this transformation stands India, not just as a fast-growing economy, but one of the world's most reliable engines of momentum. Entering 2026, India brings with it a powerful combination of strong macro fundamentals and rising global relevance. Growth remains among the highest in the world. Inflation is stable, public investment is accelerating, and with interest rates easing, credit and consumption are poised for a fresh cycle of expansion. The global headwinds of 2025, from tariff resets to supply chain fragmentation, have created new opportunities for India. As companies diversify away from concentrated manufacturing hubs, India has emerged as a credible alternative, a destination with scale, stability, and reform-driven competitiveness. From electronics to defense, from green hydrogen to digital services, India is becoming a central node in the world's rebalanced production networks.
One thing that India has done very uniquely is somehow brought together a virtuous cycle from the policies, the programs, the technology stack, and the Indian market. Right? It's the private sector participating fully, right? Whether it's in payments, whether it's in healthcare, whether it's in insurance. It's tremendous to see that virtuous cycle. It's not about any one thing. In fact, Bill loves the India stack, and he always asks me, can I take the India stack and put it somewhere else? And I say, you can't take the India stack by itself. You've got to take the entire thing. And so, to some degree, that is magic.
At the same time, India's fiscal discipline sets it apart from many emerging markets facing debt stress. Strong tax collections and prudent budgeting give the country room to continue investing in infrastructure, manufacturing, and social development. And as the world accelerates its shift towards clean energy, India is positioned not just to participate, but to lead in solar, green hydrogen, and next-generation mobility. The rise of artificial intelligence adds another layer of opportunity. With one of the world's deepest talent pools and a digital public infrastructure unmatched in scale, India is ready to capture the productivity gains of the AI era. From logistics to finance, from retail to public services, AI-enabled transformation will be a defining force in India's 2026 growth story.
AI is an interesting investment opportunity because we don't really know what the end products are going to look like. But those who know and those who really understand AI programming, they're the ones who have been investing, and they happen to be mega cap companies very, very large private investment companies that can cut large checks and also lend at a big scale.
In a world searching for stability, India offers something rare: growth with resilience, reform with opportunity, and ambition with discipline. As 2026 begins, India stands ready not just to grow, but to lead in a global economy being reshaped by uncertainty, innovation, and the promise of a more sustainable future. India 2026, a confident economy in a fragmenting world. Bureau Report, DD India.
Well, Mr. Basu, so if you were, a big investor, like one of those mega caps, where would you be putting your money in 2026? Let's say which sectors and which countries?
Well, I would be putting my money on India for, after all, the Indian equity market has had a relatively poor year. And typically, when you are one of the poorer performers, you're likely to be a strong one next year, because India offers strong growth, low inflation, a likely current account surplus, low levels of debt relative to the rest of the world. It is a paragon. It's an island of stability and strength in a turbulent global economy. So India is definitely going to be right up there. I would be looking at places like Japan. I would be looking at places like Vietnam as other places to invest. And sectors, I think the IT sector in India has had a challenging year. It's set to rebound quite strongly. And I think as interest rates come down, the rate-sensitive sectors of the Indian market, things like banks and property, etc., are going to do a lot better. And in terms of technology, India is, as the report rightly points out, India is playing now at the cutting edge of things like green hydrogen. And that is going to be an important factor as we go forward. The renewable sector, in terms of energy, is going to be a winner. And India is, of course, competing with China in almost every area,
right,
but is beginning to win. And if you look at EVs,
right,
Tata and Mahindra are right there at the cutting edge. And the overall automobile sector in India, I think, is another one worth looking at.
We leave it there. Thank you very much, Mr. Prasenjit Basu, economist and author. Thank you for joining us and helping us understand what 2025 has been and what 2026 will look like. 2025 will be remembered for brave decisions that helped the Indian economy charter a bold course, one that is being seen as an example for developing countries, strengthening India's position also as a leader in the global south and a bridge between the global north and the global south. Thanks very much for watching and wishing each one of you compliments of the season and a happy new year. Namaskar.